We're starting to see new experimentation come in that is possible today. That's a slight improvement. And then looking forward further down the line, we have much bigger expectations for how much lower those trust assumptions can get. So if I were to quickly run through them, it would be things like a sidechain that sits on top of Bitcoin. So this would be like Arch Network, where basically they have their own validator set that run off a proof of stake, or you could have like merged mining, delegated proof of work, which is basically like using hash power as a way to select the leader in that validator set.
What's up, everyone? Welcome back to Shoot the Shit number 6. I'm your host, Matthew Nay, and I'm here with some of the Enterprise guys, Kenji, Chris, Dylan, and Sunny. Today is June 2nd, and we have a loaded agenda. We're going to talk about some Solana Accelerate debrief, maybe Bitcoin Vegas debrief, some Hyperliquid transparency issues from Sunny, a new report from Chris about Dripster, some BitcoinFi, get into Helium's growth, and maybe some new token that launched over the weekend with Loud. But sadly, our macro guy isn't here, so we're gonna stick with on-chain stuff. So what are you guys thinking with crypto prices? With the week a little bit, we're down 5% on the week, 1% with ETH, 12% with Sol, 10% on Hype, but we're up since last recording. So what are you guys seeing from your bags from the tokens you guys are all tracking?
Yeah, it looks like the asset selection matters, people, correct? Hype Sol is up, Hype ETH is up, Hype everything is up, BTC to everything is also up, and so look, it doesn't seem like this is some kind of a bear market where everything is contracting like 70-80%. Seems like that move is largely done. It also doesn't seem like it's a bull market where everything is just pumping like there's no tomorrow. We're back to, bid the quality assets. All this on-chain capital has to flow somewhere, and right now it looks like Hype is congregating a lot of those flows. There's some stuff like Kita that we talked about in the last podcast, quietly hitting close to $1 billion in FTV as we're speaking. So clearly there's some activity going on. Everything I'm seeing from the Solana trenches seem to be pretty bleak. Launch coin is down to 130 million, 13 cents or so. Loud did not have a very loud weekend. And so I think for the most part, people are just kind of cautious. And it seems like more and more token selection is starting to matter, which means it's going to be a high difficulty period. But yeah, if you are in Hype, you probably aren't noticing all that. So congratulations to all the Hype holders out there.
Yeah, I largely agree. I think things have been quiet. Things have settled somewhat on the tariff front. I think there's less uncertainty there. I think like that little initial pump we got with Bitcoin hitting all-time highs and the rest of the market's kind of following, I think that's settled for now. We're kind of just like, okay, like we've readjusted, like we've recovered from the early 2025 downturn after the agents meta collapsed. And now we're kind of just like sitting and waiting to see like what's the next, large trend or like the next narrative, like what's going to be capturing the crypto market's attention going forward. And I think like, now's the time to be relatively stabled up, be in some high quality assets, kind of start eyeing what you might want to be looking at in the future. But I don't think markets are rushing to invest in anything. And I think the, internet capital markets narrative kind of being, I would say it's underperformed. It kind of didn't really go anywhere. I think that kind of indicates that people aren't just bidding at anything and that they want to see high quality projects and narratives emerging.
Yeah, I think the market's also just getting a lot smarter. Like the internet capital markets thing, obviously everyone was excited about that for a couple of days. As I think we talked about last time, people immediately saw kind of like, put overlaid virtuals on top of it and saw, okay, similar pattern. These coins aren't actually intrinsically linked to anything. And then that turned investors off, regardless of like what the quality projects are on there. They're just seeing that lack of actual value accrual back to the token and pattern matching that. So yeah, I mean, that was definitely, like a little bit disappointing, but I think it's also like the sign of a healthy market, like we're starting to see these things and recognize them for what they are versus, kind of like extrapolating into the future of what it could potentially be and getting a little bit caught up in the froth there.
Yeah, I'm getting some sense, Kaj, I don't know if you want to hop in and say anything, but I'm just getting the feeling that like within people's broader portfolios, on-chain portfolios at least. Stablecoin percentages are still high. BTC percentages are still high. People are still tuned in. They're still on CT. They're still watching what's happening. But yeah, I think people are just kind of waiting for something to happen. And that's where in something like Hype is advantageous. Because in general, I kind of view that as an asset where the smartest people in crypto, the more they think about it, the harder they try to break it down, the more they realize what a quality asset it actually is. And so you just kind of have this time-based capitulation where over time, people are like, oh, you know what? Like, I get this. Like, this makes sense. I probably should have studied a little bit harder earlier on. Probably should have read those Messari reports. But that's kind of what I think we're getting at with Hype. Like, there's been no slowdown in fundamentals at all. The growth trajectory has only continued. And so, yeah, there's definitely latent capital just hanging around. At least that's kind of what I've got no data to back that up.
Quick shout out to Sonny, was on the Full Port pod, hyping up his knowledge about just on-chain clubs and Hyperliquid in general. So that was pretty cool to see, and he sounded pretty smart on there, so that was awesome. But what's this driving with Hype and going to all-time highs again and everything? Do you see this coming to Hyper EVM? Do you see these coming like off onto the EVM chain and stuff, or is it just the price that's really gating all this hype? Not to say hype, but I think you know what I mean. But like, yeah, are some of these apps gaining traction? Anything interesting, or is it still too early to tell like what's going to be winning there?
Oh, the thesis is definitely materializing. Like UBTC volumes are going up. Hyper EVM TVL just crossed $1 billion. You know, a little bit of a skirmish online there with people who, yeah, I think people are currently, some people are in the camp that Hyper EVM is fully incentivized. Some people like me don't think it's incentivized really at all. Other people think it's like a mix of incentivized activity and unincentivized activity. You know, either way, I think everything across the board is looking great for Hype. You know, overall volumes have not slowed. Someone managed to open a $1 billion notional position on the platform and everything went perfectly fine. And so, yeah, people are just kind of, I think they're just capitulating. Like they're slowly starting to understand the thesis. They're slowly starting to see the vision. You know, large buyers are probably TWAPing. You know, funds who don't have exposure are probably scrambling. And it seems like that convincing bottom under $10 or so was set, you know, about a month ago. And so, yeah, it really does seem like just it seems like it's just a pocket of crypto alts right now that's just congregating a lot of attention and attracting a lot of flow. Rightfully so. I think they're really so. The metrics are up and to the right. But yeah, that's basically what I have to say there. I know we have some more hype topics later.
Yep.
I'll jump in real quick, but I kind of feel like the Hype EVM, so there's obviously like a fundamental thesis where, okay, you have this super performant club and maybe you can build better like lending liquidations, yada, yada, yada within that club. And so that remains true. But I also think there's a factor where Hype EVM can do really well because a lot of people miss the hype trade. Like most people just wrote it off. It's already ran. And I think there's a lot of capital that's pretty hungry for hype beta. And so looking to get exposure to that ecosystem in a way that feels like it has more upside than the actual chain itself, I think will be interesting for a lot of people, which could lead them to farming, leading them to use the Hype EVM and kind of keep pushing those metrics up. So it almost feels like you could see success just from like a continuation of the hype trade, if that makes sense.
Yeah, and I mean, I think like what you're saying, a lot of people miss the hype airdrop. So like it's kind of a no-brainer to position yourself, to at least like somewhat position yourself for this potential next hype airdrop. Like, I think if you miss the boat on that first one, it seems very obvious to me that you should at least allocate a little bit of capital if this actually does end up manifesting in some sort of airdrop.
Yeah, I would agree. I think we go over to the transparency thing about where I think you were talking about, Sonny brought up the James Wynn, $1 billion position on the platform. And then CZ had this tweet about how someone should launch a dark pool perp dex because of just being able to see the position, liquidation hunters going out and seeing that. And so that was his reason. But so I'm curious on yours than everyone else's as well. Like, what do you think about being these large positions, just being trackable? Now, I think we saw today him asking for money to fight the liquidators and everything. So curious what your thoughts on the transparency aspect of a awesome performant perp dex like Hyperliquid.
Yeah, I think a lot of this conversation started when Jeff posted his tweet about how he thinks in the long run transparency will actually improve execution for traders on Hyperliquid. And there were a lot of people who came in and just flatly like disagreed. One of the things that people cited were that if you look at TradFi, you know, over 50% of volumes congregate on dark pools and different OTC exchanges. And so, if you want to appeal to the highest volume traders out there, maybe you need to build in some sort of private / obfuscated method for them to trade on Hyperliquid. And I'm not going to sit here and correct these people, and I'm not going to correct Jeff on market structure. Like, I don't know if it actually improves execution. I know Jeff was referencing ETF rebalances, which are public, they're timed, they happen at the same time every day, and they seem to get fine execution. There doesn't seem to be any problems there. And he cited that as an example. I mean, I think that's certainly an interesting one to look at. My view is right now, if you look at the amount of people who are trading on chain that actually need privacy, I think that percentage of people is mostly negligible. Like, if you think about who actually needs privacy, there's a lot of toxic volume that needs privacy. People who are insiders and are dumping their bags, people who are hedging, people who have some sort of like insider information / alpha that the rest of the market is unaware of and wants to hide that. Or it could be somebody who just wants to place like a massive position, like James, who he had a $1 billion notional BTC position. It was like greater than 10% of Hyperliquid's outstanding OI. And so, yeah, someone like that might not want to get hunted and probably doesn't want to publicize their liquidation price, although he seemed perfectly okay blasting it all over Twitter. But the majority of people who want to take on a position of that size probably don't want people to know what their liquidation price actually is. But the vast majority of organic, non-toxic traders who are just looking for genuine perps exposure or spot exposure, they don't really need privacy at all. I don't think there's any evidence that suggests that privacy actually or transparency actually harms their execution. Not to mention, most people on chain don't actually have enough size at this point to make a meaningful impact on Hyperliquid's directional biases. So I do think that it's kind of an overblown issue for now. And I do imagine that if the need arises in the future, there will be plenty of easy solves to enforce more obfuscated trading on Hyperliquid's platform. You can do it through different front ends built on builder codes. You could do it by unlocking a few features like transferable open positions, where somebody, let's say a master account, could pipe client transactions through one venue and then kind of transfer those open positions to a bunch of different wallets. And so, yeah, I think it's an interesting discussion to have eventually, which is, if we want Hyperliquid to be the source of price discovery and we want all volume to eventually migrate on chain, should we have some sort of a privacy feature built in? But my argument is, hey, a transparent open market in the long run that's extremely liquid, that's aggregating a ton of volume, you're going to get better execution there than if you were to submit a transaction to a dark pool or to private makers, or if you try to route an OTC transaction where you're basically kind of at the will of whoever's taking the other side of your trade on pricing. I do think it makes more sense to have a fully transparent venue where market makers can come in and counterparty trades that they want to, and form their own view of true pricing. And ultimately, that's what Hyperliquid is about. It's an on-chain venue where everything is transparent and the entire exchange is built in a transparent manner. And so I don't think this is like I don't think this is something that Hyperliquid needs to worry about now. I also think there's a bit of, hey, this is the whole point. Like, we want a fully transparent, decentralized exchange. And I also think that if we need some sort of a balance between fully transparent trades and positions and obfuscated trades and positions, there will be people who come in and build that on top of Hyperliquid in the future. And so those are just sort of my general views on the topic.
Yeah, it does seem like this only matters if we get another on-chain club that is equally as performant, that gets just as much retail flow or starts competing on the retail flow. And then maybe the privacy aspect becomes like a specific point of differentiators for certain users. But at the moment, it's not important for the Hyperliquid story. It only becomes important like much further down the line. Do I even want to talk about like what I think? Does it matter?
I think the people want to hear what you think.
Like, I guess with like getting into the nitty gritty of the debate of like, does the transparency matter? Is it beneficial or not beneficial? I'm in the same boat where I don't know enough about microstructure to like specifically say this is the reason why transparency is or isn't good on these large orders. But like zooming out and trying to form a thought, like just kind of rattling off here, I do kind of fall into the camp that the transparency is a bug, not a feature. The full transparency. And the reasons that I see that is that it makes sense for any profit maximizing user to want to front run this. Like if you knew a massive buy was coming in, chances are you'd want to front run it. We already see like in markets that have this level of transparency, aka the Ethereum mempool, like there are people actively front running it. So there are profit maximizing people who want access to this flow or want knowledge about the flow, which can lead to not necessarily, I don't want to necessarily call it worse execution. I guess it technically is, but yeah, that's my thought there. And then the other part of it was like from my time in TradFi, I knew this guy who worked specifically on the buyback desk, like on the trading floor. Like all they did was company buybacks. So that's kind of similar where there's a huge buy order coming in. You have a rough idea of when that's going to happen. And their desk was like isolated in like a glass box. Like no one could see what they were doing. They couldn't communicate with anyone else. They were like siloed into this little 3-person desk. And the only advantage that they had over the rest of the floor was like when these buys were coming. So like that's kind of like the regulators in my mind are seeing that as there is an information edge there that you maybe don't want to leak. So yeah, I don't think it really matters right now, but I think in the longer term, we would want someone to build something on top of Hyperliquid that can change that. But kind of to Sunny's point, like someone will do it if they need it.
Yeah, I think there's a good point there where you have to make a distinction between exchange transparency, like Hyperliquid's transparency as an exchange, and what orders it's facilitating on its platform, in what manner and what order, and maybe the transparency of like the full transparency of specific users and traders who might not necessarily want to have trades publicized. And yeah, like I think if it's something more programmatic, like an ETF rebalancing, which is the example that Jeff cited, or it could be the assistance fund, which like predictably TWAPs hype every single day to the tune of like millions of dollars on a daily basis. That is fully transparent too, and people have a good expectation that volume is going to come in on any given day. And probably a difference between that and somebody who has alpha and wants to make a specific move on one particular side that is kind of worried about what signaling that alpha might or what implications there are to signaling to everyone that they're making this particular move that seems abnormal and might be driven by some sort of unique alpha. And in that scenario, I can see why you might want some method to kind of obfuscate your trading patterns. But ultimately, like I think for now, the story, just organic growth of traders who don't necessarily need all that. Like that's going to carry volume growth going forward. But if you do hit the point where like you want to start appealing to these specific pockets of trading activity, then I imagine there'll be a front end of some sort that can come in, address the issue for them.
Yeah, we need someone to build a hyper cache or tornado liquid on top of Hyperliquid and with those bitter codes. But something I guess that is the big debate about like bringing transparency, and like that was a big bullish use case of just crypto in general and having funds on chain and kind of that transparency aspect. And something kind of related, kind of kicking it over to like the Solana Accelerate, wearing my hat. That was a couple weeks ago. And I think there's like 3 big themes that I saw that week. One was Alpenglow. I think that's going to be a pretty awesome consensus method. We can get into that like a later episode later down the line when more information about it is public. Second was these large just legacy Ethereum players, Chainlink, MetaMask coming over, supporting the network. I think that was really awesome to see. But then the third one that I think is kind of relevant and that I want to touch on is the real world asset and equities on chain narrative that was really big that week. So from the real world assets, you saw like Accred being into Drift Institutional, their new product being now launched on Camino. You can go and like lend against your position there. But then what I really want to see what you guys think about it is the equities on chain. So we saw Kraken announce support with X stocks is going to be on Solana. So I think there's a little tidbit there that I want to touch on. Like what are they going to be doing with Inc, their L2? I think that's a little interesting topic there. And then also R3 is bringing equities on chain on Solana. And then we have the announcement from about a month ago with Superstate and to the Solana Policy Institute bringing Sol Strategies on chain. So one, let's talk about the Kraken announcement. What are they going to do with Inc? Is this kind of the end of these single sequencer chains, L2s, and that kind of everyone launching an L2 and everyone just picking a chain that they think is going to be a winner? And then also like what is the appetite there going to be for going to buy Tesla shares through my Phantom wallet or just on the Solana network or any different network, and seeing what you guys think? Because I think in general, everyone's like, oh, real world assets are cool, but like the degens on chain aren't really going to want to go and bid that. So curious what you guys think from the equities on chain narrative that I saw at Accelerate.
Or Dylan, you want to start?
Sure, I can start. So yeah, I think like the idea of equities on chain has been around for a while. Now with regulatory changes and what looks like good news coming up on the legislative front, I think a lot more people are thinking about equities, especially since stablecoins have really dominated mind share over the last 3 months or so. I think like on-chain traders don't really need exposure to stocks. Like it's not hard to get exposure. There's always been the argument that okay, like you're in, like a nation in the global south, you don't have access to stocks. Like this is an easy way to get into stocks. And I don't think we've really seen much of an indication that that's happening yet. Like I think that's definitely down the road. I think stocks also cost a lot of money in order to like make a sizable return, and a lot of people just want stablecoin exposure just to like have a store of value rather than seeking to get ROI on their capital. So I think, I've always thought that it makes more sense for stocks to start off as more of a perps product, so you can make a directional bet on them, more permissionlessly, maybe take out more leverage. That makes sense for a retail trader. And you don't really need to tokenize a stock to do that. So I think like that's where we're going to head first. Over time, like stocks will be tokenized on chain, but I think that's more to the benefit of the issuers, the exchanges, the underlying asset managers who hold these assets rather than like on-chain participants. I mean, we could get a bit more into that. I think that's a bit more nuanced. I'll stop there. Let Kenji give his thoughts.
Yeah, sure. So like my thing with RWAs is it's a great use case. It's a massive use case. It's one that has been like fantasized about in crypto since the beginning of blockchain. But people have this like misconception that like having RWAs move on chain is TradFi coming in and with like capital to buy our bags or to push things up. And that's just not true. Like they're coming on the supply side. So when big TradFi institutions are coming to Solana, they're basically putting like a stamp of approval on Solana that says, hey, this is now a big enough market for us to experiment with. And maybe there are people there who want to use the products that we're already issuing. I think you look at the Solana user base and it's mostly like we associate it with memes. So I don't think these things are going to get like meaningful adoption out of the gate. That doesn't mean that it'll never work. And if you start to think of like, well, where could the RWA demand actually come from? To me, it has to be liquid funds, or it has to be funds that are moving in size that want to use like a certain stock as like a short leg. Maybe they want to like hedge out some of the market risk, maybe through equities. So I think it's more sophisticated, larger players that will want to use these, or that need to have the demand or need to demand to use them for them to start taking off. I think it's also worth noting that like almost all these products aren't really using the chain at all outside of just asset issuance. So it's not like any of these products are secured by Solana or even secured by Ethereum. They all have their own transfer agents in the back. So it's not quite the signal that we all think it is. Like it's an important step in the right direction, but we're still so far away from any RWA becoming like a meaningful, important part of the crypto ecosystem. And then I guess I'll end with, I also agree with Dylan's take. I think given my view that, okay, you want sophisticated actors to use these as part of their like wider crypto strategy, perps make a lot more sense than spot. You don't have to, spin up as much of the regulatory risk. It's like a simpler product. You can experiment quicker too with getting listings. So you just need a market maker. You don't need to actually bootstrap any supply. So that makes sense. But the fact that we don't have market maker overlap between on-chain and off-chain means that we haven't been able to figure that out yet. But maybe we'll get there.
Also with perps, you can get the notional exposure and volatility that people on chain actually want. I mean, no one really cares about owning the S&P on chain today. When you look at the cohort of users that currently mostly contribute to the real volumes that we see today. So maybe if you offer that on 100x leverage through perps, it gets a lot more enticing. So yeah, I do see like an interesting opportunity here to move RWA perps onto different venues. Hyperliquid launching HIP3 is going to help bring that to their chain. Interested to see other implementations of it going forward. But yeah, I mean, I do see this as sort of the end goal, right? Like, how do we get from like trillions of volume and hundreds of billions of on-chain volumes to like hundreds of trillions of on-chain volume? And the only way to do that is to bring all assets on-chain that people actually care, all the assets that people actually care about. And right now, it seems to me we're just kind of building the piping for that. We're kind of figuring out the infrastructure. We're testing out all these different ways to trade on chain with these self-referential, like volatile meme coins. But eventually, I think that is the goal, at least to me. Like that's how we win, and we're still very very far away from it, from like a both like an infrastructure perspective. Like we just can't compete with the performance of some of these centralized exchanges. But also, I think the majority of real users today don't really give a shit, and so like going to what it's either going to be the liquid funds, referencing what Kinji was talking about earlier, or it's going to be some sort of perps product that allows people to lever up like 20, 30, 40, 50x. Like that's the only way I see this appealing to the natural on-chain user.
Yeah, I agree. I don't need to go buy S&P on through my Phantom wallet yet, but one day totally will want to maybe loan against it, buy a house. Who knows the future in 5 to 10 years? And I agree that it's kind of that next step. We saw the infrastructure play out with meme coins. It can handle the volume. Let's bring some actual real world assets that are biddable with size and kind of take that next step in experimentation. On the topic of debriefing, want to get over to Bitcoin Vegas. I know, Dylan, you were there last week. Kenji, you just wrote a report on BitcoinFi and all the different ways of bringing Bitcoin programmability and different ways of the side chains and then also the hyper unit stuff. So, Kenji, why don't you talk a little bit about like what you saw in that report, the breakdown, and then specifically around the OPCAT discussion and debate, and seeing, Dylan, what you saw there at Bitcoin Vegas, and then just in general, what the vibes were like out in Vegas.
Yeah, sure. So the report just centered around like Bitcoin scalability and programmability, mainly looking at sidechains and roll-up systems. Basically, it's like TLDR. It's a super interesting space just because I think we forget the magnitude or how much bigger Bitcoin is than any other asset in the industry. So if you're able to unlock, just a few percentage points of usage, then that's actually huge in dollar terms and will probably be very exciting. But the issue right now is because Bitcoin doesn't have any covenants. So basically, you can't build a smart contract on there. You can't have any trustless bridging yet. And so anything that is being built on top of Bitcoin comes with these trust assumptions. I think most people know that. But to run through them, it's like, okay, you could have a centralized wrap Bitcoin. You could have just like a generic multi-sig. And then you could also have like a federation, which is basically a multi-sig where you might have a changing number of signers or a rotating list of signers. And also they might be economically secured. So there might be like a token in the background that isn't Bitcoin that those signers have to stake and get slashed. So it adds a little bit of additional economic security. But we're starting to see new experimentation come in that is possible today. That's a slight improvement. And then looking forward further down the line, we have much bigger expectations for how much lower those trust assumptions can get. So if I were to quickly run through them, it would be things like kind of like a sidechain that sits on top of Bitcoin. So this would be like Arch Network, where basically they have their own validator set that run off a proof of stake, or you could have like merged mining, delegated proof of work, which is basically like using hash power as a way to select the leader in that validator set. And basically those validators have to come to consensus for any withdrawals, and they jointly sign that someone is pulling out of that sidechain. So that's slightly better. You have to trust a network rather than a list of signers. But for us, we don't think it's really, the BitcoinFi narrative can't really happen until we get BitVM and these ZK bridges. So basically the way that those work is you have someone post a proof to Bitcoin, and Bitcoin can actually verify, it can't verify the proof, but if someone wants to challenge that proof, it can verify who is correct and who's not correct. So in that way, you get this N-1 trust assumption, which is way better than having to trust a couple multi-sigs or a couple signers or a small validator set that isn't tied to Bitcoin. And so we think that's potentially the unlock. There are issues there where you need an operator to front all the withdrawals, kind of similar to the way an intent-based bridge works. And so the operator has to scale alongside with the TVL locked in that bridge, which isn't a guarantee. So capital efficiency is a little, but I think something to highlight on all of those different things that I just laid out is none of those are like directly related to the Bitcoin network security, if that makes sense. You're always trusting someone outside of the validator set to facilitate and keep your assets safe. So, how many people you have to trust changes with each of those, but I think that's the core point. And the ultimate goal is to get covenants on Bitcoin, which basically means I can write a smart contract there and I can make a withdrawal without any outside operator, only trusting Bitcoin. And that just isn't possible right now. And you need to add new opcodes to give developers the flexibility to build those bridges. And basically the leading one right now is OPCAT, which is just adding the concatenate function to Bitcoin, literally taking two strings together and concatenating them. And Bitcoin devs are cracked enough where they realized we can actually build a trustless bridge if you give us that function. And so the reason it doesn't have to be OPCAT, but the reason that's the leading one is because people in the community see it as being like the lowest level change with the least surface area for like unexpected things to happen. You know, a lot of people point to runes and ordinals like, hey, we didn't know you could do this with Taproot. It just kind of happened. So Bitcoiners want to minimize that risk. So that requires a soft fork though. So we have no idea if or when we would ever get it. And that's kind of why these other things are starting to pop up. But assuming BitVM launches, we get those ZK bridges, we see it as being a potentially large unlock because we think wrap Bitcoin and those centralized assets, they have about 1.8% a total Bitcoin share. So if you lower those trust assumptions, surely there's a large or an additional amount of holders who are willing to put their Bitcoin to work when you get much lower trust assumptions. And so we see the biggest ones being like lending, swapping for stablecoins. That's the main two. Our alpha would be, I'd want to look at the cap tables of all these different projects and see are the major stablecoin providers on any of those cap tables who can help give native stablecoins immediately to those sidechains or to those rollups. We think that can be a moat. We talk a little bit about that in the report, but basically it's just a big overview of what's going on in the space. It felt like it was time to finally learn about it, and glad I did because it's kind of interesting. But I don't think that was the talk at Bitcoin Vegas, if I'm remembering correctly.
Yeah, I think Bitcoin Vegas, so it came off Bitcoin, I think, hitting all-time highs the prior weekend. The energy is definitely there. It is abundantly clear that like the political will for crypto and Bitcoin in the US is like also at all-time highs. So we had Vice President come in for a keynote Wednesday morning, which is, you know, a 9 a.m. talk, fully packed, like hundreds of people couldn't get into the room to see him speak. You know, he said like the White House is like an ally, a champion of crypto, basically affirmed like full support for the industry going forward. We also had the Trump brothers, Eric and Don Jr., come in to kind of talk about American Bitcoin, which is their new Bitcoin treasury company that's they basically run the micro strategy playbook, but instead of buying Bitcoin directly, they buy miners and then they can get a discount on Bitcoin. I think they said like $40,000 per Bitcoin. So much cheaper acquisition costs. And they also announced like a $2.5 billion acquisition of Bitcoin from the Trump media group. So it seemed like the MicroStrategy playbook is like being copied everywhere. We're seeing, you know, there's tons of talks of new companies coming out, just trying to replicate that strategy. I think it's debatable whether like a lot of these will be able to do the same thing, but I think like there's clearly interest there. So yeah, I think like politically, we've never seen the industry in better shape. We're seeing lots of institutional interest. I think one of the big topics was stablecoins, interestingly. So everyone's talking about kind of the conventional stablecoin talk that we see just in crypto right now. It was pretty interesting how it was one of the center topics of Bitcoin Vegas, because in my view, stablecoins are somewhat opposed to Bitcoin. Like, you know, they're not fully decentralized, they're not trustless, they're kind of in some ways the antithesis of Bitcoin. So for that to become such a central topic where everyone is like very interested in speaking about, I thought that was interesting. And then, yeah, I think one thing to note was the participants, like the attendees, were very retail focused. So if you go to most crypto conferences like Token 2049 or ETH Denver, it's mostly people who work in the industry. It's the builders who are like, you know, constructing the product, getting things to market. Here, it seemed like a lot of long-term holders of Bitcoins, fans of Bitcoin. People were really just into Bitcoin, not into crypto more broadly. And a lot of them didn't really know about the Bitcoin DeFi projects that are emerging, you know, the Bitcoin L2s. Like every one of these major Bitcoin projects had a stand or on the convention floor, but I didn't see a lot of engagement. It seemed like people were more focused on just like holding Bitcoin. Is Bitcoin price going up? One thing I thought was funny was like the talk for like how do I minimize my Bitcoin taxes on capital gains was like packed. And then like a lot of these like very innovative Bitcoin projects that Kenji was talking about, they didn't really get as much interest. So yeah, I think those are overall take. Energy is great. Definitely like political institutional will is there for Bitcoin, crypto more broadly. And it's, you know, I wouldn't say there's a lot of attention on the DeFi Bitcoin stuff, but I think it's definitely growing. Like progress is being made. People are talking about it. It's just not a lot of attention being given at the conference in my view. And yeah, I think they're gonna hold it again next year in Vegas, which I think is kind of funny. Just like the gambling capital of the world. I don't know what that says about Bitcoin and crypto, but I think that's something to the node as well.
Just one thing I learned from Dylan going to all these events is that the energy is always there.
It wasn't there in Denver.
Okay, there we go.
Yeah, no, I think, I made that pretty clear in that analyst takeaway. It was not there at all in Denver. I called it lethargic was the general mood. So it is not always there.
No, I heard a interesting take that someone was worried about the quantum resistance for crypto or for Bitcoin just because of the slow moving nature of changing the code for Bitcoin, which is a feature also, but could be maybe potentially a bug when it comes to OPCAT and programmability and everything. But I want to make sure we talk about Dripster and Chris's latest report. And so Dripster's platform on Solana, it's self-described as Kickstarter meets Pump.fun. So Chris, what's Dripster? Why do you think it's interesting? Why do you decide to write a report about it? And what do you like about it?
Yeah, so this was a little one I whipped up because I was looking into the internet capital markets thesis and I found this and I thought it was really interesting. So basically Dripster, you can design different products with Gen AI and then use internet capital markets to pay for the production of these products. So the general flow is someone creates a product on there. Once they're done with the design, then that gets launched on a bonding curve. The token gets traded on a bonding curve and then eventually graduates to a DEX. All of the trading fees that are accruing during that period of time are actually sponsoring the real production of the product. And then once it hits certain market cap thresholds, you can go and claim the product for free because the production's fully funded. What's really interesting about Dripster is they're an offshoot of this company called Offscript. So the people that built Dripster built Offscript before. Same concept, just without the internet capital markets kind of portion of this. So Gen AI design, people would upvote and pre-order these things. And then when it hit enough pre-orders and upvotes, then it would actually get made. So the team has pretty deeply embedded connections to tier one manufacturers, which takes a really long time to develop. That usually takes going to see the manufacturers in person, negotiating bespoke deals with these people. And they also have an AI agent framework, they call it Offscript OS, that's powering all of the production in the background. So when you're actually creating the Gen AI production of this, they have agents that are checking against their manufacturers, making sure that the actual materials that would be required to make this are at a given manufacturer, making sure the design looks okay. And then once that market cap is hit where the production kicks off, they have AI agents in the background handling all of that production. So this is a trend that we're seeing across different enterprises, different retailers like Walmart. They have kind of like these bespoke AI agent productions in the background. So you can get an idea that is generated by AI actually to market really quickly and for 95% of the time, 95% of the cost reduced. So they're kind of like capitalizing off of that trend. And I just thought this was a really interesting take on a launchpad where you actually have something like an RWA that is backing this token. Because we've seen a lot of these launchpads come to market over the course of May. You had Boop, you had Let's Bonk. Obviously, you have Believe, but at the end of the day, these fees, they're not really, they're going to creators, you can say, but it's not really attached to anything. The token doesn't have real utility. So I thought this was just a really interesting, at least experiment in this, a really novel launchpad, and definitely, in my opinion, has a pretty defensible position because they have all of these manufacturer relationships built out. They already have the bespoke AI agent framework in the background. So anyone who's going to come in from Web3 and try to compete with this is going to have a really hard time catching up to that. And there's kind of two different target audiences that they have that can potentially come together and create a pretty great virtuous cycle throughout this, but they can also serve each of them independently and I think still succeed. So you have obviously the speculators, the people who are on Pump.fun trying to get the 100x off of a meme coin. And then you also have these people who they've proved out product market fit, at least for the Gen AI designed products, which are just Web 2 people who are interested in the product. So I think it's going to be really interesting from a go-to-market strategy, how they're going to approach this, and if they can find product market fit with either both of these demographics or just one of these demographics. That's definitely going to be their biggest challenge. And just to be abundantly clear, they have a lot of challenges that they're going to have to face along this course. I think one of the big ones too is getting the big runner. So getting a coin that can go to, 10 figures, 9 figures market cap that then people can look at and say, okay, these launches can actually reach a really substantial price point. So I can get a lot of multiples investing on projects on here. So yeah, that's kind of the TLDR on it. I think the team is really good. I met with founder. He's been in the space since 2017, was a VC before, has done multiple projects. One of their, I think the kind of like the CTO / AI lead was one of the original contributors to Stability AI. So the team is really cracked. I think the idea is really interesting. And I think they just need to get a little bit of traction, start seeing some numbers on some of these launches. And I think it could be, they could get, have something that is really unique for this kind of fee-based funding and taking those fees from price insensitive buyers that we know people are willing to pay and funneling them towards something productive.
I know you got to drop here in a second, but were you able to, did you get I saw the first product was the Crocs for Accelerate, or was like the loosely designed off Crocs. Have you been able to get yours yet?
So I actually didn't get a chance to claim them. They were claimed really fast. So the way the claiming process works is if you own a certain amount of the token, whenever it hits that market cap milestone, you can go and claim it for free. But it's a limited run. So there's kind of this gamification aspect where you have to be really quick to claim it once it hits the milestone market cap. And I'm hoping the token keeps on going so that they release another tranche and I can actually claim them. So yeah, no claims for me yet. I'm interested in that one. I also have a bit of the proof of history watch, which I think is pretty cool. It's kind of like a Solana based watch. So I'm hoping that hits some market cap milestones. And I think, the longer they've only been in production for 2 months. I think the longer this goes, we'll hopefully get some prominent creators coming on there and launching things, and should be more cool products in the pipeline.
Yeah, looking to see you in the that watch and Crocs one day in the office, and we'll know where the token is at.
Absolutely, there will be signs.
There will be signs. Awesome. No, I like Dripster. I think it's really cool. I guess sticking on Solana, but we'll kick it over to Deepin corner and Dylan. So what are you seeing from the Helium growth?
Wait, can I jump in for like 30
Totally.
seconds? Sorry, I interrupted you. Rude.
Keep going.
Chris isn't here to talk about it, so it kind of makes it less exciting. But like in my view, Dripster is almost like creating a new market where you can invest in like an individual Amazon seller. This is like a very high level question. One of my tenets in like looking at products is like there's no such thing as a new market. Like if the market doesn't already exist somewhere at some level, like there's no point in building it. Like there has to be proven demand. Does that? Oh no, we can cut this section. Just go to Solana.
No.
Keep going.
I'm tracking. I'm following. It's like Etsy and all those creator platforms like kind of combined and using creator fees to kind of create an interesting thing on chain.
Yeah, but in my view, it's like they're doing it, and in doing so, it's like a new market that doesn't exist outside. Like right now, there isn't like a PE shop or like some professional investor that's like scooping up shares of Amazon sellers or like drop shippers or like a lot of these smaller products. And so if that market doesn't exist like at all or in a meaningful way, is it ever possible to like build a new market? I guess is like the question I'm getting at. Because that's what like part of the internet capital markets thing that doesn't align with me is like we're trying to create these new markets that don't exist in the normal world. And I've always felt like if there is...
What do you mean there are no new markets? I'd challenge you on that point.
Like every market is a derivative of an existing market. So it's like you have some, okay, so let's take like Pokemon cards, for example. Like we could, in my mind, it makes sense that there's like a proof of concept out there with Pokemon cards. And so therefore we could get like NFT trading cards at some point because we know people are willing to buy and hold these certain types of assets. But if there isn't any proven market outside of crypto, do we ever think it's possible that crypto, by moving things on chain, it unlocks a new market? Like, because in my mind, moving things on crypto makes the market better versus creates this entirely new asset class.
Well, you're just taking something and adding PvP speculation to it. And so on the Kickstarter kind of functions the same way if you remove the speculation. So it's people who are willing to pre-fund some kind of product. There's actually a lot of like shirts and like fashion stuff on there, household items and whatnot. And then in this scenario, the bonding curve is hitting that like funding threshold where the product actually gets created and you get sent that product. And so that's in its simplest form what Dripster is doing now, but you're also just adding rampant speculation on top of it where people can now trade each other and try to profit off of these tokens in a way they wouldn't be able to on like Kickstarter, which to me, that sounds sort of like a derivative. It's just a more degenerate Kickstarter where people are actually trying to PvP each other.
Yeah,
on
I think
price.
the idea is supercharge growth with tokens, the core crypto thesis. People are spreading your product around on social media because they want the token to go up. So like if you can gather any amount of attention, like this is a more effective way of fundraising initial costs of production for your product than just doing a straight up Kickstarter type crowdsourcing initiative. I don't know. Is everything like a derivative market? Like, I think there are latent demand. There are latent markets for everything. It's just like a matter of like, can you make the market work on supply and demand? And like, is the technology there? Like, I don't think, I think like, I don't know if I like conceptualize this the same way. Like, is everything a derivative of like something that already exists? Like, if a million X better solution to something emerged, would I call that a derivative of an existing market, or is it just like if I could teleport, like is that a new market from airplanes, which is a derivative from cars, which is a derivative from like the horse and whatever carriage,
Yes.
like and so forth? Like, is that like, I don't know, I feel like that's like a useless way of thinking about it.
No, but you can like tie it back to a fundamental like desire that everyone has. Like, I have a car because I want to get to point A to point B. I get in a plane because I want to get to point A and point B. I want to teleport because I want to get to point A and point B. So if we have no like shown source of people want to get from point A to point B, there's no point in building like a teleportation device.
If we're gonna philosophical, like, is it like, what's the core need of everyone? Like, to feel good, like to have like their basic needs met. Like okay, like sure, like everything is a derivative of that. But like, how is that like a useful way of thinking about it in aggregate?
Because I think a lot of people think crypto unlocks demand, and I like strongly disagree with that. Crypto doesn't unlock demand; it services demand. And so if there's never proven demand, then there's nothing to unlock.
But wouldn't the Amazon sellers, the Kickstarter, the Etsy people that are selling like stickers and stuff kind of be the base, and this is the derivative from that? Because there was one project on Kickstarter that I wanted. It was like a offshoot of Bose headbuds that you could throw in your head and you couldn't hear anything. And like, I didn't want to spend the $240 to maybe get it in a year or 2 years from now. But if I could have like helped fund and also profit off of it and then gotten some cool free sleep headbuds, like if it was launched on this platform, obviously in a couple years from now, when this is like more robust and works in the like the Web 2 traditional world, like I would have bought that token and I would have hopefully gotten some cool sleep buds. And then, so that's where I see the derivative coming from.
Yeah, I agree with that. Also, maybe it's being derived from a different market. Like, what did the NFT markets derive from? Like, was it just like crypto speculation? Like, what captures the crypto speculation demand? Like, why should this or why shouldn't this get that?
I'm not sure I understand the question.
Like, what did NFTs, like, what was the derivative market for NFTs?
Just art and collectibles.
Like JPEGs.
Yeah.
No, I disagree. I think the market cap of NFTs far exceeded like these small, like the comparable art collectibles.
I don't know. Like, you think the market cap of Picasso's is lower than Punk's?
I don't, is the comp Picasso's? I don't know.
Well, that's like the speculation, though. That's what you're speculating on, is like we are buying the Picasso's of on-chain, the on-chain Picasso's.
But I think what I'm arguing is the market was just speculation, not like collectibles, art collectibles.
Okay, so do you think Dripster is not a new market then? Like, it doesn't make sense? There's no precedent for it?
Yeah, that's my view. It's like, okay, we have proven supply side, right, with Kickstarter, but there's no proven demand side to go buy any type of exposure to those businesses or to those products more specifically.
Yeah, I feel like we're meme coining. We're just adding meme coins and pump fun to stuff that works. And they should probably stay segmented. Like, if you want to buy memes and profit, you just buy meme coins. If you want to go fund like an art project, you can do it on Kickstarter. I sort of see what you're saying. Like, I don't know if there's precedent for like this weird amalgamation of both of those markets. Like, it's like,
I think that's where the innovation is, though. Like, using pure degen greed to create real. It's kind of Deepin in a way, to create real world utility.
I disagree. Whatever.
Why do I need perps when I have futures?
Because we don't have futures markets for crypto, or like we don't have like traditional futures markets for crypto. So if you wanted exposure, perps were filling that demand. Like, there has to be a demand. In my view, we're never spinning up magical demand. We have demand that exists. You can see it. And it's about, can you fit this into an on-chain product that like
where did the
demand
for crypto come from?
We don't open that can of worms.
is this conversation done?
Yeah, I hope so.
Segueing from Dylan saying it's Deepin, we could talk about another one that kind of created a, I guess kids you would say, derivative of a old market with telecom. But the Helium's growth has been pretty crazy recently. They had 1 million users on their Helium Mobile on May 24th, Saturday, and they're sitting around 950,000. So, Dylan, what are you seeing over at Helium? Are they really crossing the chasm with this offloading carriers? And is it people signing up for their true program, or is it more just the offloading section? And like they had the deal with AT&T. And so, what are you seeing from Helium?
Yeah, I think the growth has been remarkable. I think last year, like everyone saw Helium's initial growth, and that was kind of the success story of Deepin so far. It was like pretty quiet going into 2025 for the first couple months, but since then, like we've seen growth really accelerate. I think it's both. So on the carrier offload, we can see on chain what's happening. So, I think almost like 15K worth of HNT burned a day. Helium's becoming one of the highest verifiable revenue producing Deepins by a large margin now. 1 million plus people are connecting to the network, and that's only bound to grow. So I think like things are looking very promising there. And then on the Helium Mobile side, again, like we don't know what the churn rate is, but like I've heard rumors that revenue is actually very high, like somewhere in the mid 8 figures. Like this is not verified at all, but it's growing a ton. And like, I saw like Ariel at Hivemapper tweet that if Helium was a private company today, it'd be valued in the billions just based on their growth. But because they're, a public Deepin that's somewhat pivoted over the years and has been around for a while, they're valued, I don't know, it's 700-800 million right now. So interestingly, the private non-crypto markets would value Helium larger, which is kind of the opposite of what we see in crypto. Everything is much more overvalued than private markets. So yeah, I think like we'll just have to see if the growth continues. I think the momentum's there. We're seeing Helium Mobile ads in the subway now in New York City. And I'm very excited about what's next.
Yeah, I think another big growth and seeing the big jump is going to be from Seeker, the Solana Mobile 2, and everyone getting like 4 months free from there. And then everyone's going to be able to, I think there's 150,000 pre-orders. And so everyone get free 4 months and then see how long. I mean, I know I will. I pre-ordered the Seeker. I haven't tried Helium out yet personally, but excited to see it on that phone. And then we'll probably keep doing it because it's pretty cheap and excited to support some Web3 projects. All right, cool. And that's going to wrap it up for Shoot the Shit pod number 6. Thanks, everyone, for listening. As always, like, subscribe wherever you are listening to us. Really appreciate the support. And we're excited to be in your feeds in a couple weeks from now. Everyone, have a good week.